Good evening, guys. Let's start with Accounting Standard 7 Construction Contracts. Alright, so this standard is mainly applicable for contractors who have certain construction businesses. Like what could be that? Building constructed, flyover constructed. So if any contractor is there who's doing such kind of activity, how he should do the accounting is what this standard is trying to answer upon. Alright, also includes intangible asset, but in our IPCC level we'll restrict only to the tangible asset portion. Fine, fair enough. Okay, so mainly for the contractors. Okay, the guys who builds the property with an intention not to use it but to just give it off. They're just pure contractors, build and give it away. In return they will get some money. Okay, so how should they recognize the income is the essence of this, or income and expense is the essence of the AS7. Fair enough. For this purpose, the contracts are identified or segregated as two. Or you can segregate a contract into two types. One is fixed price contract, another one is cost plus contract. Fixed price contract means name itself is saying fixed price contract. So the contract prices or the consideration is fixed. I will give you 1 crore, give me 1 kilometer ka underpass. As simple as that. Nothing doing. Correct? Oh, that is your fixed price contract. Next one will be cost plus contract. You will say, you will negotiate as what? I will give you the date of expenditure I've incurred. To that, add 10% and give me the amount. Margin for me is 10%. Whatever cost I've incurred, I'll support the bills. To that, you add 10% and give me the money. That is your cost plus contract. Fair enough? All. Under AS7, we use something known as percentage completion method. Why we have to use any method? It is simple, no? A contractor is building a flyover. He will know how much he has spent. How much ever he is getting, he'll book as revenue. How much ever he is spending, he'll book it as expense, no? Why any method and all is required? Perfect. In all these, the whole essence of AS7 is, normally these projects, right, they don't end within a year. If it ended within a year, all the expense, all the income would be transferred off to that year ka P&L itself, so everything is rosy. But here, if you have any metro or flyovers and stuff, they don't end it in a year. Normally they take about more than a year. Let's say there is a metro work happening, they take about 7 years. Correct? So then how will you recognize? Let's say the project for that is 100 crore. 100 crore is a project work which this one particular contractor has got. He will build a metro for about, let's say, 10 kilometers or 20 kilometers within 7 years. That is the arrangement. And he will get in return 100 crore. Now the question is, 100 crore is the total revenue. Which year you will book how much? Contractor would say first year only 100 crore. Because he wants to, correct, no, he wants to present the financial statements in a better way. Correct? That way. But is that the right way? Is that the right way? No. So like how much of expense to book, how much of income to book would be a problem in such contracts. Hence we have this particular standard. Okay, mainly for those projects which are going into, not ending in that particular year, but going beyond a year. So this standard is trying to help out how much of revenue and how much of cost has to be booked every year on year basically. For that purpose, we use something known as percentage completion method. There are two things. One is completed contract method and another one is percentage completion method. So if you are able to identify the cost of that project easily, and if you say that you are able to get the benefit, if you are able to measure the benefit and if you are able to measure the cost properly, then you can go for something known as percentage of completion method. This method is very simple. How much ever percentage of work is completed for that year, no? Not much of revenue you book. In the first year, 10% of the work of that metro construction is over. What is the revenue? What was the revenue agreed for that metro project? 100 crore. What is 100 crore ka 10%? 10 crore. Yes, book 10 crore of revenue. Because 10% of the work is complete. Is that okay? That's what is your percentage of completion method trying to answer. Next year, let's say 30% of the work is complete. 30% more. I mean, totally how much? 40%. So by the end of second year, recognize 40% of revenue. As simple as that. How much our work is complete, that much of revenue you can recognize. Fair enough so far, guys? That's what they're saying here. See, construction contracts are mostly long term, meaning they take more than 1 year to complete. Hence, there is a necessity as to determine how much of revenue and cost has to be booked every year as such. This method of accounting, okay, this is fine. All right. So we'll come back to percentage of completion method. We'll go for one small concept known as segmenting and combining. Let's say on this road itself, on the forum mall backside, the government wants to construct a flyover. Forum mall ka backside, they want to construct a flyover. Why? Their choice. Let's not go there. Fine, they want to construct a flyover. Backside, they want to construct a flyover. Front side also, they want to construct a flyover. They went crazy. They're like, full flyover. Kormangala is going to be full of flyovers now. They decided, okay, front side also flyover, back side also flyover. And there is this one guy. Normally, government projects are awarded through bidding process, right? There is this one contractor who bid the lowest amount. So he got both the contracts, which is what? Building a flyover on the front side of forum mall as well as the back side of forum mall. Is this okay? Now, should that contractor account that 2 flyovers as one contract or 2 separate contracts? Did you get the question? Should that particular contractor who won 2 flyover ka contracts, should he treat that as one contract and do one accounting process for that, or should he treat it as separate contracts and do separate accounting for it? Are we okay? That is a concept we're trying to test. Alright, whether you will combine or you will show it separately. So for that, there are certain factors. Factors are, how have you sent the proposal? First is a proposal, and this question is important. It has come quite a few times in your RTPs and mock papers and previous year papers. Theory question, but it is coming quite often. So just listen to what I'm saying. One is about the proposal. How have you sent the proposal to the government? Did you make one proposal, 200 crore for both the contracts, or you sent 120 crore for first flyover, 80 crore for next flyover? Did you send a separate proposal or did you send it as one proposal? That is one. 2, how have you negotiated the contract? Did you tell, if you give me flyover 1, if you give me flyover 1 contract, flyover 2 contract, I'll give you at a discount. That means one is dependent on the other. That way did you negotiate, or did you negotiate them separately, or you told 100 crore for each? Give me how much ever you want. That means what now? You're linking the two or keeping separately? Keeping separately. How have you negotiated? Is that okay? That's the second factor. And third one, how are you able to maintain the cost of those 2 contracts separately? Because sometimes what happens, the laborers and materials and all will be combined ones. Because same materials will be used, same laborers will be used. First 1 hour there, 1 hour here, like this they'll juggle around. So are you able to keep the records of that separately? So these are the 3 factors we have to test and then see whether it's a separate contract or a one contract. Can I repeat that? When will you treat it as a separate contract? 1, negotiation should have taken separately. You should have not linked the 2 contracts. Negotiation should have done on both the contracts separately. Is that okay? And proposal for both the contracts also should have been sent separately. Alright, not one proposal but different proposal. And 3, cost of that particular contract or that particular flyover ka work should have been, you should be able to measure it properly. For this flyover, how much is the cost? For that flyover, how much is the cost? If all these factors are satisfied, then separate contract. Then when will you combine? When will you combine? Other way around. When you have negotiated as one package. When you have sent it as one proposal. When the costs are not measurable. In those cases, you will treat them as one contract. Are we fine, sir? That is what is segmenting and combining. Segmenting means treating that as separate segments, meaning treating them as separate contracts. Combining means treating them as one. Okay. 3 clauses we learned. That is what they have given here. Check. Separate proposal, separate negotiation, cost and revenue can be easily identified for all the 3 of them. If all these 3 all the 3 conditions are satisfied, means then it becomes a segmenting contract, meaning it becomes a separate contract. If not, it will be treated as a combining contract. So far, okay. This question is important. Yes, provisions are important basically. You'll have to list out. This case study has gone quite a few times. So you'll have to call out those provisions and accordingly give a conclusion. Yes, sir. Not that it will come in your attempt. It has come quite a few times is what I'm saying. Okay. Yes, sir. Okay. So very actually practical standard this is. One good thing about group 2 ka standards are most of the group 2 standards are number driven. Group 1 ka standards, most of them are concept driven. You have a lot more concepts there, but here concepts are a little lesser. It's more like number crunching standards these are. Okay. So concepts are very limited. I don't know how you take it. If you are a concept person, then maybe Then like if you are number wise persons, like these are like group 2 standards are much, you might feel it much better connect wise. Okay, anyways, so can I go for the next concept? First we'll do off all the concepts in one go. Maybe take up 1 or 2 questions in between, and then we'll do all the practical questions in one stretch. Practical questions are easy, don't have to worry about it. Fair enough? Okay, then there is something known as additional asset. Alright, let's go over what they have written a little later. Let's look at a small example. We'll continue with the example what we were saying. Government is constructing a flyover, both front side of the forum wall as well as the back side. Both of the contract has been given to a single contractor, single person. Okay, so work started. Now we decided that it's a separate contract because it was subject to separate negotiation, proposal, and cost and revenue are also separate. So it is 2 separate contract. The contractor is maintaining it for. Okay, flyover ka stretch for let's say was 2 kilometers initially. Both the flyovers were for how many kilometers stretch? 2 kilometers stretch. So work over, let's say the term period was 3 years. Government told I'll give you 3 years. In that give me 2 kilometers wala stretch. Okay, how many years I told? 2 years mein you have to complete, or 3 years mein you have to complete 2 kilometers ka stretch. Is that okay? After 2 years, the government told how many kilometers was it? 2 kilometers. Government told construct an additional 1 kilometer from. Let's make it 3. They changed. Probably government changed. Okay, so the new government said let we also would like to inaugurate something as from our name. So instead of 2 kilometers, let's make it 3 in 3 now. Earlier it was 2 kilometers in 3 years. Now it is 3 kilometers in 3 years. We told time will not extend. New government, we believe in more efficiency. Fair enough. Is this okay? Only one flavor, only front ka they decided the election. They thought that is good promotion for them. Back ka as it is. Okay, so, is that example okay? Now that 1 kilometer ka extension, should I treat it as a separate contract or should I merge it into the old contract itself? Got the scenario? Should I treat it as a separate contract or merge it into the old one itself and treat it as one? What are your thoughts? Good, no? What are your thoughts? Can happen also, right? Separate, like easy, separate. Why? Any specific reason? Just. She's saying initial terms are altered, so separate contract. Okay. Separate contract. Why?
Because the government changed, the other party changed.
Oh, okay. No. He's saying the whole party changed. Okay. But signing is still under BBMP, let's say. Government initiated it. So, signing authority is still BBMP.
So like
signing didn't change, contract. Huh?
Takes for a significant part of the other part, like the other flavor, so it must be separate contract.
Come again, what was that part?
Like, initially it was 2 kilometers and further extending 1 kilometer.
Yeah.
Which means the percentage of the work will increase, right?
Accordingly, I'll adjust.
So which means that must be a separate.
Oh, so you're saying again, terms changed, contractor terms changed, that's the reason you want to keep it. Work is also changing. Quantum of work is changing. So based on quantum of work, he says it should be treated as a separate contract. Any other thoughts? Any other thoughts in the first bench on either sides? No? Balcony, and that side just walk in. He's just walked in. He's like, give me some time. Let me at least breathe a little. Yeah, that side. Your thoughts? No thoughts. Okay. So all answers are fine. Let's look at the provisions and then we'll decide. Is that okay? One is whether to treat it as a separate contract or to merge it to the old one. For that you have to test 2 conditions. One, you extended a flyover by 1 kilometer, right? At additional asset ka nature you have to check. How different is it from the old asset? Is it technology wise, feature wise different from the old asset, or is it same like the old asset? If it is different means separate contract. Let's say 2 kilometers ka flyover, after that 1 kilometer ka underpass. Is flyover and underpass same in characteristic, usage and cost and stuff? No. So that means you will treat it as a separate contract. That is one. Okay, so you have to check the naturistic or characteristic of that extra asset that came in. Is it same or more or less similar to the old asset, or is it substantially different? Both looks wise, technology wise, design wise, could be anything. Check what are the characteristics, same or different. And 2, how did you negotiate for that extra asset? Did you tell the government, give me that extra 1 kilometer ka stretch, no? I will do this at for a lesser price. How did you get that new contract? Did you use your old contract as a base to get the new one? If you used your old contract as a base to get the new one, standard says merge it into the old one. Or if you've done a separate negotiation for it, you told 1 kilometer you want, give me 100, give me another 20 crores extra. Like if the government says I already gave 100 crores, not a separate. Give me 20 crores extra now. That means now you're keeping it separate. Then it will be treated as a separate contract. Otherwise, it will get merged into the old one. Fair enough. One, the characteristic of that extra asset you're going to check. And two, you're going to check how the negotiation happened on that. Did you negotiate, keep the old contract into base and negotiate, or did you negotiate on a separate term? Fair enough. That is what they're talking about. Yes, sir. Conclusion is okay, I hope now for you. And that's what they're saying here. Asset differs significantly in design, technology and function from the asset covered under original contract. Original contract asset and new contract asset is different. They're saying when will you treat it as a separate asset? For you to treat it as a separate asset, characteristics should be same or should be different. The new asset should be significantly different from the old asset in terms of technology, design, blah blah. And two, what about the price? Price of that new asset is negotiated without regard to the original contract price. You're not keeping original contract as a base, you're doing this as a separate negotiation. If these, one of the two conditions is satisfied, it's not or, and it is or. Underline that. If either one of those conditions is satisfied means, then you will treat that as what? A separate contract. Otherwise, it'll get merged into the old contract. You will have to revise the term. Old contract or percentage, etc., will change. Fair enough? Yes, so far? Cool, right? Easy only so far? Understood? If you want to recap of what we have done so far, it's good. Good, everybody? For the new folks, you want to give a recap? Somebody who's walked in new? Late? What did we cover? This construction contract is predominantly applicable for the construction contracts. We're going to only concentrate on construction contracts at this point of time at IPCC level. Then afterwards, you might get some questions on the intangible also. See a final. Whatever you're learning here, every standard is there in final also. But here it's as per AS, there it's as per IFRS. Terms will change. Name, nomenclature will change. Some clause also might change. Here, whatever we're doing, base working note will be same. There'll be a lot of add-ons that will be coming through. Okay, so mainly applicable for construction contract. Basically for that contractors who build it. Mestri is what we call. Mestris. Mestri wala AS it is. Okay? Okay. Those guys. Okay, it's applicable for them. Contracts, we told that there are two types. Fixed price, cost plus. Fixed price means price is fixed. Cost plus means we will give the cost data. To that we will add the margin and recover the money. Okay. Then we discuss something known as percentage of completion. We didn't totally go into that, but we can follow percentage of completion, we said. Because the contract doesn't end in 1 year, it goes beyond 1 year. If you follow completed contract method, then it will be crazy. The contract is going for 7 years. For 7 years, you will not be able to book even a single amount of revenue. Hence, better method is what? Percentage of completion. But outcome, you should be able to measure it reliably. Contract outcome. Whether you're going to get a profit out of it, loss out of it, and cost also, you should be able to measure it reliably. If these two, if you are able to do, then only you can go for percentage of completion. Okay. Then we discuss something known as whether we should treat something as a separate contract or a one contract. How do you categorize that? How do you find out whether it's separate contract? 3 factors. What are that? Separate proposal. For it to be a separate contract, there should be a separate proposal and then separate negotiation. Cost and revenue also you should be able to identify separately. You should be able to measure them. Then separate contract. Or else combine the contracts and treat it as one. Next we saw one small concept known as additional asset. If new asset came in or old asset got extended and new asset came in, then to treat it as a separate contract, one of the two conditions should be satisfied, which is what? One, the new asset ka design, technology, etc. should be significantly different from the old asset or the original asset. And two, negotiation on that should have happened separately. You should not keep old contract as a base and negotiate. Okay. First question is all yours. Sambhu question. I'll help you read the question, then you give me the conclusion. Sambhu negotiates with Indian Oil for construction of franchise retail petrol outlet stations. So we are constructing petrol stations. based on the proposal submitted to different zonal office of Indian Oil. The final approval of one outlet in each Berhampur, Salem, Vadodara, Warangal is awarded to Sambhu. In 4 regions, we got the contract to construct 4 petrol pumps. Okay. Agreement was done, however, in a single document. One stamp, probably to save stamp duty, they entered everything in one document. Okay. One document, a single document is entered with Indian Oil for 25 lakh rupees. It's actually not 25 lakh, it is 250 lakhs, I guess. Or make it as, add up everything, how much is this? That's, oh no, 245, 4 is missed out there. Instead of 25, make it as 245 lakhs. 2.45 crores. Typo. Instead of 25, make it as 245 lakhs. The agreement lays down the value of each of the 4 outlets, 44, 66, 80 and 55, in addition to individual completion time. Comment whether Sambhu Limited will treat it as a single contract or 4 separate contracts. This question is important. It has come quite a few times. All of these type. Single, separate. One contract or 4 different contracts. Single, separate. 1 and 4. Why 4?
Separate. Because since they have laid down values for each item individually, and plus the specifying that after individual completion time, so that must be treated separately.
Go back to the factors. For you to categorize as separate or combining, segmenting or combining, correct? Segmenting means separate. For you to separate the contract, there were 3 conditions. What are those 3 conditions? Different proposals. Is it there? Did you send the proposal to one zonal office or 4 different zonal offices? Check the second line itself. Based on the proposal submitted to different zonal offices. Isn't that given there? So different proposal. Yes or no? Correct or no, guys? And negotiation should have taken single. Though you entered the amount in one contract for 245 lakhs, is the price of each contract same? You check. One is 44, another one is 66, one is 80, another one is 55. That means you have negotiated them as a package or you have negotiated them separately. If you have negotiated them as a package, you should have just mentioned 245 lakh. Why should you give individual contract, individual value? If given individual value means how have the negotiation taken place here? Package or differently? I means what is that? Negotiation, separate negotiations or one negotiation? Separate negotiation. Cost, assuming that the cost and revenue can be identified, which mostly it will be, because since it is not at one place, it is at 4 different places. So what should be treated as? 4 separate contracts. Got it? Don't be misled by the word single document and all. Now, I think that's where probably you worried. I mean, that's where your thinking shifted from separate to single. One document, one value. Correct? But even though one document ka one value, it is separate negotiation. Fine, sir. So can we write the answer? So question number 1, right? So Q1 ka answer. As per accounting standard 7, construction contracts, or as per accounting standard 7 hyphen construction contracts, following factors have to be satisfied for a contract to be accounted as a separate contract. So this is your first Faraka provisions we listing out. What is that first condition? Proposals, separate proposal should be sent on the contracts should be negotiated separately. Third one, cost and revenue of each contract should be measured reliably. That's your provision. Second para, link it to the case. In the present case, come on, which is the name of that contractor? Sambu Limited have sent different proposals to 4 different zonal offices. And also have negotiated these contracts separately as value for each contract is given. As value for each contract is given to be rupees 44 lakh, 66 lakh, 80 lakh and 55 lakh respectively. So the final conclusion will be, hence Sambu Limited should treat these as 4 separate contracts. Conclusion. Can we go for the next? All right. In fact, there is one small concept, hang on, that is not there. But anyways, we'll read this question. Concept also I'll cover as part of the question itself. Okay, let's read off this question. Nandi, a contractor, has just entered into a contract with a local municipal body for building a flyover. As per the contract terms, Nandi will receive an additional 2 crore if the construction of the flyover were to be finished within a period of 2 years from the commencement of contract. Nandi wants to recognize his revenue since in the past he's been able to meet similar targets very easily. Give your views on the above. So let's say he wants to he's constructing a flyover for the municipal BBMP, let's say. Maybe that value we don't know what is it. Maybe 100 lakhs or maybe 100, but maybe 10-15 crores could be that value, contract value. They're saying if he completes that flyover within 2 years time, then he will not only get that original price, but he'll also get some 2 crore extra. Alright. And Sambu Limited and this Nandi wants to recognize this revenue now itself. And his justification is in the past I have met the target. My history says every time I have been able to complete in time, and I will recover this money from the government very easily, hence I want to recognize this. You have to give your thoughts. Just give it a read and let me know what it is. Yes or no? Actually, that line is not there. Okay, sorry, what is that? She's saying based on prudence you can't. In others? Same idea? Okay. So I'll give you the answer. Then we'll make a slight modification to this question. We want to bring in one more scenario. Then you tell me the answer. This one I'll tell. Is it fine? So before we get to the answer part, there's a small concept. Write this down in a notebook. Something known as incentive payment. As per AS7, incentive payment means, name itself is saying, what is that? Incentive payment means additional payment that you're receiving. Okay, other than the contract price, you're getting something extra for you're completing the work before time, no? So you're getting something extra, that is known as incentive payment. So as per AS7, incentive payment can be recognized as revenue, or can be recognized only, you can write, only if a contract is sufficiently advanced, underline the word sufficiently, contract is sufficiently advanced that it is probable to estimate that performance standards will be met. This is A. B. Incentive payment or rather you write and incentive payment should be measured reliably. Okay, if these two conditions are satisfied, then you can recognize incentive payment. Can we spend a minute on these two conditions first? Then we'll go back to the example. We understood what is incentive payment. You're getting something extra. It's like a token of gratitude. Since you're doing something extra over and over what is required, you're giving something extra. So that extra is known as incentive payment. You can recognize, you're getting, no? So that means it's a revenue, income. You can recognize that income only if two conditions are satisfied. One is what? The contract should be sufficiently advanced so that it is probable for us to estimate that performance standards will be met. Meaning what? What are they saying is, let's say here the condition was you have to complete the flyover within 2 years time. Let's take the same example. You have to complete the flyover within 2 years time. Now it is 14 months. 1 year ke baad 2 months. 14 months are over. 95% of the work already over. We are in the 14th month and what percentage of the work is over? 95%. So that means, have we reached that stage where we can conclude that the performance will be met? Correct? Because in 14 months itself 95% is complete, means you have still another 10 months to complete just 5% of the work. That can be met. That is what is the first condition. Contract should be at that stage where you can tell whether that standard will be met or not, whether that target will be met or not. Okay, this is subjective. You can't put a cap on this. You don't ask me percentage. Subjective, case to case basis, you'll have to take a call. What is that sufficiently advanced is subjective matter. Fair enough? Is that okay? Hence they will not give you in percentage and all, don't worry. Fair enough? And what? You should also be able to tell that how much incentive payment you're going to receive. It should not be like false promises. Government told, okay, you construct, we'll see later. You construct later, then I will decide how much I want to give. That it should not be. There should be a concrete evidence as to how much you're going to get. Then only you can recognize. No? If you don't know how much you're going to get, can you recognize that? Hence, that is the second condition. One, it should have reached that stage. That work on the contract should have reached that stage to say that target will be met. Two, you'll also get that incentive payment from the government, meaning you should be able to measure it reliably. If you are able to do this, then you can recognize the incentive payment. Fair enough? This is your concept. In fact, we can try. We can make this as this thing only. Question number 2 itself. This is question number 2, right? Because first para normally what do we write? Provisions. This is your provision. Yes. Yes. No. This is your provision. So no, you don't have to write this. That's all. Cut off that. All other things will be same. Matlab, you don't have to cut. I'm saying in examination. Are we okay? So you just start with as per AS7. Incentive payment can be recognized only if these are satisfied. Okay. Now come back to the case. What about Nandi? Did they just check the condition? Did they anyway say history and all? Did they anyway say past history you check, future you check, all that blah blah? Have they told anywhere in the condition about history? No. So with that in mind, come back to the question. In the question, have they told? In fact, check the first line itself. First line also is a solution. He has just entered into a contract. That means what? Is contract sufficiently advanced? No, because the contract has just been entered. So that means what? First condition fails. History is not your criteria to recognize, but performance standards are, or advancement of the contract is, which is not the case here. Hence, what will be your conclusion? Can Nandi recognize that incentive payment? No. First, you have to reach that stage where you can tell that you're going to receive it. So far, okay. Can I write the conclusion for this itself? But the second para can I write? In the present case, comma, Nandi has just entered the contract. And hence has just entered the contract, and you can say past performance is not an indication to recognize this incentive payment. This incentive payment of, how much is that amount? Of rupees 2 crores. Final conclusion. Hence, Nandi, is it? Nandi cannot recognize rupees 2 crore in his books of accounts. In his books of accounts for the current year, we'll write. It's that not that he can't recognize at all, just that he can't recognize it in the current year. Maybe if in the next year, if his contract is sufficiently advanced, means then he can recognize. Hence, he can't recognize in his books of accounts for the current year. Is that okay with all of you? Easy? All right. Can I go for the next question then? Okay, leave this part. This is entirely like, this is what we're going to do in our problems. In the remaining problems, we're going to do this only. After we read the problems, if you go through this, easily you'll be able to understand. For now, it will not make much sense. So let's leave that recognition part for the time being. So 1, what did we determine in the last thing there? Revenue should be recognized on what method? What method? Percentage of completion method. Now, how to determine the percentage of completion? What do you think? How can we determine percentage of completion? How will you be able to tell 20% work complete, 30%, 90%, 85% like that? Is there any benchmark for us? There'll be different stages. What do you mean, sir? What stages are you referring to here? You mean to say physical inspection? Physically you can check. Like in case of our example, how much was the flyover for? 2 kilometers. So that means 1 kilometer is complete, means 50% done. So like that. So that is one method of identifying percentage of completion. Physically inspect it and check the quantum of work and accordingly determine. Fair enough? Or if you don't have that kind of expertise, or if that contract is some slightly different, then you can also look at, there'll be something known as engineer, civil engineer. He can give a certificate because he has that domain knowledge. So if he certifies that 40% work is complete, can we take his opinion as a base and use it? Yes. But for all our problems, we use the last method, that is the cost method. The cost method. What is the cost method? Let's say the cost to construct that flyover is 2 crore rupees. The cost required, not the contract price. Contract price means what? Revenue. Revenue is not 2 crores. The cost required to construct that flyover is 2 crore rupees. Okay. We've already spent 1 crore. Total cost we estimated to build that flyover is how much? Initially, when we take the contract, we'll have an estimation of cost. Yes or no? Then only you will bid, or just left, right, center, you will bid off. I will have an idea about the cost. May not be 100%, but you will still have an estimate, reasonable estimate. Correct or no? Initially, our estimate, let's say, was around 2 crore. 1 year passed and we've already incurred how much? 1 crore rupees. Can you tell me what percentage of the work is complete? 50%. How did you come to that? How did you calculate that? Can you tell me in steps? How did you do that? 1 crore divided by 2 crore into 100. What is that 1 crore? Cost already incurred. Hence the formula will be cost incurred till date divided by 2 crore. What is that 2 crore? Total cost or total estimated cost? Divided by total estimated cost of the contract multiplied by 100. That is your formula. Okay. This is what we're going to use for all our problems. First two methods are also there for theory points. Alright, physical inspection method, technical survey method. But in all our problems we'll be using this method. Yes sir. Disclosure requirements. The amount of contract revenue recognized in the current period. How much revenue did you recognize? The methods of contract revenue recognized. How methods used to determine stage of completion. How did you determine the stage of completion? Cost method, physical inspection method. All that you have to give us a disclosure in your notes to accounts. Now onwards, full-fledged problems. Number driven. Can we start? This is okay? And don't worry, we have a format. For all the questions, same format. I'll run through. Compute the percentage of completion and the contract revenue and the cost to be recognized from the following data. Contract price is 75 lakh. Contract price means what? If you complete the contract, how much you're going to get? That's your revenue, can I say? This is your revenue. Income basically. I can't say it is income, I can call it as revenue. Fine. Material issued is about how much? 18 lakh, of which material costing 3 lakh is still lying unused at the end of the period. Probably we are constructing some tangible asset. For that we require some materials. We totally ordered materials worth 18 lakh, but out of that only 3 lakh is still unused. That means it is there in my godown. That means how much material have I used for construction? 15 lakhs. How are you finding the percentage of completion? Cost incurred divided by total estimated cost into 100. Yes or no? All these are cost incurred. Now the question is, will you take 18 lakh or only 3 lakh or only 15 lakhs? 18, 3, 15. 3 numbers. 18, 3, 15. 15. 15. 15. Nobody for 18. Why 15? Oh, why not 18? They have spent. But I've already paid the money for it. Unless I pay the money 18 lakh rupees, I'll not get it. Correct? No. So I've already given 18 lakh rupees ka Gandhi notes to him and got the material. Just that 3 lakh worth of material, I've not been able to use it. Huh? I can say, oh, okay, I can sell back those or I can return those. Okay, then after that I will again renegotiate. That way if you think I can't book any purchase only. All the purchases that you make also will have certain clause that, like all your Amazon purchase, return within 30 days. I mean 30 days they're not able to recognize any revenue. You book a separate purchase return if return happens, yes or no? So we can book, we can do a reversal later on. Correct? No? Why? I want you to think. Check on the impact side, you'll be able to get the answer. Impact side. What will happen if cost increases? If cost incurred till date, check the formula. Tell me what will happen if cost incurred till date increases. Numerator increases means percentage will increase. Correct or no? And how is the revenue recognized? Based on percentage of completion. So higher the percentage, higher the revenue. Correct or no? Hence they have taken a prudence approach here. Now you imagine there is a scope of manipulation here. No? Let's say construction is going on, contractor. He wants to recognize more revenue. And show it in his books. 31st March, he will buy all the material required for the next 4 months. Pay all the laborers advance. Okay, cost incurred will increase. So what will happen to the revenue? What will happen to the percentage of completion? Increase. So what will happen to revenue recognition? Increase. Hence they said, sorry boss, not allowed. I don't want the material, the cost that you have paid for material. I want the material that you have utilized for the contract. How much did you utilize? 15. Hence you can take only 15. So that way that is cut off. Because there was a scope to manipulate there. Hence they have just plugged in that. Okay. Hence it is not material purchased. It is material utilized for the purpose of construction. Okay. It is not the payment, guys. It's the accrual. Always think on that basis, because all this is going into P&L. No, P&L is not done on a cash basis. It is done on the accrued basis as such. So material utilized is only 15. So book only has 15 on. Yes, sir. Move on to the next. So if you have understood this, next one you will be able to tell me. Labor paid for workers engaged at site, 12 lakh. Labor paid, okay? Paid is 12 lakh. 2 lakh is still payable. So cost incurred number will be 12 lakh or 14 lakh. 12 lakh or 14 lakh. We want the paid portion or we want the accrued portion? You want the paid portion or accrued portion? Have the laborers come? Have they worked? Yes. Is salary due to them? Yes. How much is due? 14. 14 is due totally. In that 12 is already paid out. So how much is due still? 2. So that means what is the cost incurred? 14 lakh. Accrued portion, not the payment portion. Is that okay? Because again, if you take the payment portion, there is a subject to manipulation. Because the more you delay the payment, lesser your revenue recognition, if you want to adjust it that way. Hence, it's always on the accrual side of things is what the standard is formed on. Okay. So the number relevant here is for 14 lakhs. The number relevant there was 15 lakhs. Okay. Next, specific contract cost. This contract has a specific contract cost. Maybe certain material specifically we ordered for it, which is how much? Can we add it? Yes, it's also a cost related to the contract only. So we can add up. Subcontract cost for the work executed. All the work we may not be able to execute. If you got a very huge contract, we may not have the expertise to do 100% of the work. Some we will also delegate to other contractors. So subcontractor, we have given some work, and that subcontractor is charging how much? 5 lakh. That is also cost only related to the contract. Yes or no? Can I add 5 lakh? Yes. But however, advance I have paid is only 3 lakh. So I should consider 5, 3 or 2. Cost is 5. Advance I have paid is 3. Balance payable is 2. They didn't say subcontract paid. What are they saying here? Subcontract cost. That means expense is 5 lakh. In that advance I have already paid 3. 2 I'm yet to pay. So which number I should consider? 5, 3 or 2? Accrued or the expense side of things, which is 5. Okay. So the relevant number here is 5 lakh. A cost estimated to be incurred to complete the contract 30 lakh. Meaning additional cost we are expecting the 30 lakh more we will incur. We've already spent something, 30 lakhs more we're going to incur. So if you add the two, what are you going to get? The total estimated cost. Cost incurred till date you will get, adding the first 3 bullet points. Total estimated cost you have it now. Into 100 if you do, you're going to get percentage of completion. Do you have the contract revenue? Contract price? 75 lakh. Based on the percentage of revenue, your contract revenue gets recognized. Simple problem. Can we do it off? Okay. This is question number Q3. Cost incurred till date. In fact, you can make 2 columns. Are they given whose books and all? Not given. No, not given. Leave, it's fine. Particulars, amount. A, cost incurred till date. Till now, what and all cost have incurred? What is the first cost I've incurred? Material cost. Will I write material cost to be how much? Will I write 18 lakh? No, 18 lakh minus 3 lakh, which is how much? 15 lakh. Okay, everybody? Guys? Okay, what is the next one? Labor cost. Labor may we've already paid 12, 2 lakh is still outstanding. So that means how much is the total accrued? 12 lakh plus 2 lakh, which is 14 lakh. Anything else is there? Specific contract cost is there, which is given to be 6 lakh rupees. Next one, we have some subcontract cost, and that subcontract cost is about 5 lakh. Yes, no? Anything else? Any other cost is there which you have already incurred? No. So then add it up. So 29, 35, 40. What is your cost incurred till date? That's your numerator. So next, what do we require? B, I'll call it as what? Further estimated cost. In future, have they given how much cost more we will incur? This is given in the problem. How much is it given to be? 30 lakhs. 40 we already incurred, 30 more we're going to incur. So that means, can I say C, that is total estimated cost. Total estimated cost, can I call it as A plus B? So which will be 70 lakhs. Yes guys. So now you have your numerator and denominator. So easily you can find out what? Percentage of completion. How do you get percentage of completion? Cost incurred till date divided by total estimated cost. So can I say D is equal to cost incurred till date, which is A, divided by total estimated cost, which is C, into 100. Can I write it this way? So do that and tell me the percentage. 40 lakh divided by 70 lakh into 100 will turn out to be how much? If it's in decimal, give me in decimal. 40 divided by 70 into 100. 4 by 7 into 100 you do. Calculator only we have not got. 57.4. 57.14 percentage. Okay, we'll take 2 decimals. It's fine. Are we fine with this? Why did we find this percentage of completion? Because revenue should be recognized based on percentage of completion. Yes, sir. But there's one checkpoint you have to do before you get to that. First, we will write contract price. How much is contract price? 75 lakh. Okay. Yes. Contract price is how much? 75 lakh. How much is the total cost you're expecting? 70. That means, are you going to make a profit out of this contract or a loss? Profit. How much? 5 lakh. Why am I asking you to check this? First PSC concept, what is it? First PSC concept, what is it? Prudence concept, what is it? Repeat the question. I'm asking you to check these two values in every problem. Total cost with total contract price, always check. For prudence concept, what is that? If this number instead of 75, if it is, let's say, let's say it is 60 lakh, then contract revenue itself is 60 lakh, but estimated cost is 70 lakh. That means, are you going to make any profit? You're going to make a loss. How much? 10 lakh. What does prudence concept say? Expect the future losses and account it right away, but do not expect future conservatism, basically, right? Expect future losses and account it, but do not expect future gains. So if there is a loss, you have to book the loss right away, whichever year you are in. Even if you start the contract and still it is a loss, means book the loss right now. Hence, we have to make that checkpoint. But it's a case of profit here, yes or no? But that means, should I have to book the gain? No. So that means only. So hence, you have to check that in every problem. Is that okay? In this problem, it's a profit scenario, but maybe in some cases, it's also a loss scenario. Done? No. Done or not done? We'll see. We have a lot of problems on loss, don't worry. In fact, whole lot of problems are on loss. This is the only problem which is not. So can be. So this is your total contract price, meaning your total revenue. Can I book 100% of this revenue, or how much revenue I can recognize? Based on percentage of completion. So revenue to be recognized. Revenue to be recognized. So can I say F is equal to D multiplied by E? Total revenue multiplied by total percentage of work complete. Is that okay? So multiply these two. How much are you going to get it to be? 75 lakh of 57.14% will be 85,500. So this is your revenue to be recognized. How much cost have you already incurred? If you want, you can write this, or you can already done it, so you can give a reference to that. Cost incurred till date is how much? 30 lakh or 40 lakhs, no? So 40 lakh ka cost, or rather 1 second. Don't write cost incurred till date, write cost to be recognized. Cost to be recognized. So you can write G is equal to what? A. Cost incurred till date is nothing but what you're going to recognize. So 40 lakh of cost you are recognizing, 42 lakh of revenue you are recognizing. That means, can you tell me contract profit or loss? Contract profit here or loss it is? Contract profit. Can I write H is equal to what? F minus G. How much is that? 2,85,500 is the profit to be recognized in the books of the contractor for this particular year. Next year, same calculation. Next year, if 100% work is complete, means fully recognize 100%. Next year, let's only 80% is recognized. Then that means only 80% of the revenue will be recognized. You don't have such questions where it's a cumulative approach. I'll still wait for a few attempts. If I feel like they're asking this, I'll bring that in as well. What I'm trying to say is, in the second year, let's say 80% work is complete. Let's say the contract term is 3 years. Second year, how much complete? 80%. That means 80% of the revenue you should have recognized. Correct? 80% totally you should have recognized by second year. But did you already recognize some revenue in the last year? So that means you have to what? You have to multiply 17 lakh ka 80% minus any contract revenue recognized in the previous year. Such cumulative questions, there so far it's not there in your syllabus as such. Comes only in a CA final. Let's wait up. If it is required, one such questions I'll bring in. Fair enough. Let's wait for those little later. Institute might start asking more sort of these accounting standard questions henceforth because they've taken off few syllabus. So they might start asking that. Let's see. Let's wait for few things for the time being. The time being, these are good. What we do. Yes, sir. So problem is done. Have you also copied? So the next question then. Next question number 4. 4 and 5 you will answer. I will help you. I'll read along with you, but you need to give me the final answer. A company took a construction contract for 100 lakhs in Jan. It was found that the 80% of the contract was completed at a cost of 92 lakhs. That means what is that 92 lakhs? Cost incurred till date. Yes. On the closing date. Till now we have incurred 92 lakhs. Company estimates that the further expenditure will be how much? 23 lakh. 92 is already spent. 23 we're going to incur further. So that means 115 lakh is your total contract cost. Total estimated contract cost. Yes guys, so far okay? There itself we can stop and give me one conclusion without even reading further. What is that? Revenue is 100 lakh. But the total estimated contract cost is 115 lakh. That means there is a loss we are anticipating on this contract to the extent of 15 lakh. It is not anticipated because all these are estimated numbers, not actual numbers. So the loss anticipated is about 15 lakh. So conservatism say loss should be accounted right away. Is that okay, everybody? So let's read further and see what they're asking. The expected, in fact, they're only given expected loss would be 15 lakh. We know how they got that number, right? So expected loss would be 15 lakh. Can the company recognize the loss for this year itself? Very much so. Fair enough. In fact, we have to do that checkpoint in every problem. Simple 1 marker question. So you'll just write answer as what? As per, which is this question number 4. In fact, we'll read 4 and 5 and make a common answer for it. Both are same. Is it okay? Certain Limited has signed 31st March, the balance sheet date, a contract wherein total revenue is estimated to be 15 crore and total cost is estimated to be 20 crore. That means total loss is estimated at, it's a profit scenario or loss? Loss. Total loss is estimated at 5 crore. No work has begun the contract, sir. Such a foolish people. Such a wrong bid they sent. Revenue they're saying is only 15 crore, but the cost they're expecting is 20 crore. No, work has only not begun. Now only first year. When you sign only, you are expecting a loss of 5 crore. Okay. Is the contractor required to give any accounting effect? Should he do anything? Yes. If there is, whenever you know the loss, you have to book the loss. So what you will do here? 5 crore ka loss should be accounted. Is that okay? Why will they enter into such contracts? Marketing purpose. Everybody markets, no? If you do one, let's say you now BMRCL is doing metro ka construction. Let's say they are making a loss out of the contract. Contract revenue is only, let's say, 1000 crore, but cost expected is 1200 crores. Revenue is 1000 crore. Contract cost is how much? 1200 crore. That means how much loss are they making? 200 crores. They are ready to incur that 200 crores because of the reputation that metro work carries. On this contract, I may incur a loss, no problem, but I will use this as a base and then get hundreds of other contracts and make profit out of it. So it's for the branding. Maybe for the branding purpose, because government work has a huge weightage, right? metro flyovers and stuff you construct. It's a huge brand for yourself. Not everybody gets it also. So that way, they might be okay to take a loss. Anyway, that is not required for us because we are doing not management accounting but financial accounting. Just if you had that thought, I thought I'll clarify. Could be one of the reasons. Could be. Or he's just crazy. Could be anything else. He just don't know how to do the maths. Okay. So find such clients. So he'll also give you a lot more bills. I mean, you can bill him more. Anyways, so are we okay with this? Under both the scenario, you have to book the loss. It doesn't matter whether the work has begun or not. The moment you know the loss, that anticipated loss has to be accounted as per AS7. Can we make a common answer? Yes, sir. Yes. You want to write it there only? Anything, sir. Anything. Okay. Alright, let's write it. It's fine. Question number what now? Question number 4. As per and 5 will write. Q4 and Q5 ka common answer. As per accounting standard 7, construction contracts, comma, any probable or any estimated future losses on the contract has to be accounted. Any estimated future loss in the contract has to be accounted in the same year that or just we can stop there, that's fine. As per AS7 construction contract, any estimated future loss in the contract has to be accounted, full stop. And then you can write in the present case. I'll write for the second or else you modify and write accordingly for Q. I'll do it for Q5, you modify it for Q4 accordingly. In the present case, there is an estimated future loss of how much? Rupees 5 crore. That is, how much was the revenue? How much was the cost rather?
15.
Cost was 50, no? No, cost was 20, right? Cost 20 crores minus revenue 15 crores. That's what we got the cost. Last conclusion, even though the work has not begun, this estimated loss of 5 crore has to be accounted in the books of accounts. The books of accounts of the contractor for the current year. Finished, guys? Okay. We'll do one and then take a break, or we'll take a break now itself? Now itself, huh? Break? Never, now only. Okay, we'll take a break and we'll listen.